basically we were doing the components of budget, right? We were done with revenue receipt and the capital receipt, right? As I told you that, it's of two types. The components are of two types. One is budget receipt and one is budget expenditure. So revenue receipt and the capital receipt we already did. And what we got to know from that budget receipt are basically the estimated money receipt for the government from all source of money, from wherever they'll get the money, it is related to that. Okay. Revenue receipt, the only thing which you need to keep in mind, they don't affect your assets and liability. Okay. But for capital receipt, they affect your assets and liability. Okay. I hope these two terms, assets and liability, are clear to you, both Sana and Halima. Clear?
Yes, sir.
Yeah. Just you need to learn these two things, assets and liability, and everything will be fine. Okay.
Okay.
Okay. Now, today we'll be doing the spending one. Okay, the expenditure one. So basically, what happened? For example, you are spending your money. Expenditure. Okay. So first thing is that what can happen? You are repaying it. So your liability is getting decreased. For example, you took money from someone, and now you are repaying it. So what will happen? If you are spending your money, that means your liability is getting decreased. And second, your assets. Okay, your assets are basically increasing. For example, you purchase some, then your assets are being increased. Okay, so these are the two situations where these things can happen. Expenditure can affect your liability. How it will be spending? Your liability is getting decreased because you are paying your loan. You are recovering from your loan. Okay. Second, if you purchase something, you spend money. For example, you bought a new mobile phone. You spended your money. That was your expenditure. And what happened? Your assets increased. Earlier you had one mobile phone. Now you have two mobile phones. Okay. So for expenditure, this is how liability increased. But when we talk about the receipt part is receiving money. So in that case, what was happening? Your liability was increasing because you took money from somewhere else. Now you have that tension. Oh my God, I have to repay. I have to repay. Right? And second, your assets were getting decreased. Why? Because you were selling out the thing. Okay. So expenditure and revenue, they are opposites. Here, liability will get decreased and assets will get increased. Here, liability was decreased and assets were getting decreased. Sorry, increase and decrease. Okay, clear both the girls?
Yes.
Clear.
Now we'll quickly move to revenue, like the budget expenditure. You know, it's revenue expenditure, capital expenditure, development expenditure, non-development, plan, and non. Okay, so accordingly we'll start. This was the table which you need to understand first. Okay, so basically, okay, we haven't done this part, right? We have only done till here, right?
Yes.
Okay. So yeah, first we'll discuss this table. Okay, this is a table. Right now it may look like, oh my God, what is this? But it is very easy. Okay. As I told you that your budget receipt is of two types. One is revenue receipt and one is capital receipt. Okay. So now this revenue receipt is of two types. One is tax revenue and one is non-tax revenue. Okay. And again, this tax revenue is of two types. Direct tax, indirect tax, non-tax revenue, the components, and capital receipt, the components. Okay. Don't worry, you must be wondering what is this now. Okay. I'll just say. We were doing receipt. Right? Receipt part we were doing. Receipt is of two types. Revenue receipt, capital receipt. Okay. This revenue receipt is of two types. One is tax and other one is non-tax. Okay. The tax is of two types. A direct tax, DT, or indirect tax, IDT. Okay. This is what you have to remember. Okay. Receipt, two types. Revenue receipt, capital receipt. Revenue receipt is of two types. Tax revenue, non-tax revenue. Tax is of two types, direct tax, indirect tax. Clear this chart?
Yes.
Okay.
Yes.
Similarly, this is what given over here. Over here, you will be drawing this chart, but you don't have to write this. You don't have to write this. You have to write only examples. Okay. Under direct tax, these example comes. Under indirect tax, these example comes. Non-tax revenue, these examples comes. Capital receipt, these examples come. Okay. So if I'll ask you, what is sales tax? If I'll ask you what is sales tax, direct tax or indirect tax, you will be answering, ma'am, sales tax is an indirect tax. If I'll ask you, sales tax is a tax revenue or non-tax revenue, you will also remember that this is a tax revenue. Okay, if I'll ask you, sales tax is revenue receipt or the capital receipt, you will answer me, ma'am, it is revenue receipt. Okay, got it? So you should remember this table, this flow chart. These are related. I can ask you anything. Either I can ask you direct tax, indirect tax. I can ask you tax revenue, non-tax revenue. I can ask you revenue receipt or the capital receipt. Clear? So these are the point. These are the example. In exam hall, you get direct question. Like you will be getting 5 questions, and you have to differentiate between revenue tax or capital tax, or you have to differentiate between tax revenue and non-tax revenue. Right? Clear?
Yes, ma'am.
So draw this table. I'll just let you know how to. First, everything should be like whatever the table is, you have to draw exactly, but you don't have to write these 2 points. You have to write only examples. Okay? Just draw it and let me know once you are.
Done.
Sana done?
Ma'am, 2 more.
Okay. Do it and let me.
Ma'am, done.
Okay, so these are basically the examples and we'll be discussing it. You don't worry. So very first thing is that, as I told you, revenue receipt is of two types: tax revenue and non-tax revenue. So under tax revenue, if someone will ask you what is tax revenue, so you will generally say, ma'am, tax revenue is of two types: direct tax and indirect. Now we will understand what is direct tax and what is indirect. Okay. So now direct tax. So direct tax are those tax whose final burden falls on the person who make the payment to the government. Listen to it very carefully because this is going to be very important. Okay. Now what is direct? For example, I am working somewhere, right? This is my office. I'm working here and I'm getting 1 lakh rupees a month here. Okay. So of course I have to pay tax to the government, right? So basically what is happening? Burden is on me and I am the only one who will be paying. Okay. Final burden is on me and I will be making the payment to the government, right? So basically direct tax are those tax whose final burden fall on the person who makes the payment to the government. Burden will, because I am working, this is my salary, so I have to pay it from my salary. Okay, so final burden falls on the person who will make the payment to the government. Clear? Second,
Yes.
when the incidence and impact. Incidence is basically something is happening, and for example, I you know let's just take an example. You have a nice dress, okay, and I somewhere cutted your dress, okay, I damaged your dress, okay, so I did that, right? But it impacted you, right? So this is what incidence and impact are two things: incidence who is doing and impact who is suffering. So when incidence and impact of the tax lie on the same person, here I am working, also I am paying, so whatever deduction is there, I am suffering it, right? So incidence and impact of tax lie on the same person, it will be the same person, it is known as direct tax. Okay. The impact of direct taxation cannot be shifted. I cannot tell my father, I cannot tell you, Sanya or Halima, that please pay my tax. Okay, I have to pay. So the impact I cannot shift it. Right? I have to pay it. Only I can, not my father, not my anyone, nobody can pay that tax in behalf of mine, because that is something I am responsible for. Okay, so the impact of direct taxation cannot be shifted. And direct tax is progressive in nature. These taxes are progressive in nature. Progressive means, see, if I'm paying tax as a citizen, if I am paying taxes on time, basically that will be, giving the amount will be going to government, and government will be using that amount in good things. So these taxes are basically progressive in nature. Okay, these taxes do not affect the market price. See, how much tax I am giving, it won't be affecting the price of the market. Why? They didn't matter. It doesn't matter. For example, if you are getting this bottle, this is a bottle, milk bottle, I would say, it is of 10 rupees. Okay. Whether you are paying 20 rupees as a tax, whether you are paying 30 rupees, it doesn't matter. The price of this bottle, the price of the product will remain same, no matter what. Okay. Example of direct tax are income tax, wealth tax, corporation tax, all those things. Okay. So again, we'll understand this direct tax. So direct tax are those tax whose final burden falls on the person who makes payment to the government. Burden is on me and I'm the only one who will be paying to the government. Okay. Next, when the incidence and impact of the tax lie on the same person. Okay, it is called direct tax. Okay, incidence and the impact is falling on the same person. I'm the one who is paying, I'm the one who is suffering. It is called direct tax. Next, the impact of direct taxation cannot be shifted. I cannot shift it. I cannot ask you. I cannot ask Halima or Sanya to pay tax on behalf of mine. No. Direct tax are always progressive in nature. They are good for the economy. And these taxes do not affect the market price of the product. Okay, they don't affect any market price of the product. Okay. Now, example are income tax, wealth tax, corporation tax. Okay. Now, indirect tax, obviously the opposite one. Okay. So, indirect taxes are those tax which are paid to the government by the person, but their burden is borne by other person. Here, I am, for example, I am doing shopping. Okay, but my bills are being paid by my parents. Right. So, basically, incidence is happening with me, but burden is falling on my parents. Right. So indirect tax are those tax which are paid to the government by one person. I am doing shopping, but my father is paying. So I am doing, but burden is borne by the other person. Okay. And here, when incidence and impact of the tax lie on the different way. Incidence means I am doing shopping, and impact, who is getting impact? My father is getting impact, and then it is called indirect tax. Okay. Next, the impact of indirect taxation can be shifted to other person. I can shift it. right? I can ask, I am doing shopping, but I can ask my father to pay my bills, right? I can ask my friend to pay my bill, right? I can ask my brother to pay the bills, right? Next, indirect taxes are generally regressive in nature. They are regressive. They are not progressive. They are always regressive. Okay, because it affects the market price. So market value gets increased, and it is not good for us. We always want cheap product. We don't want, there should be inflation in the market, right? And indirect tax have direct and positive effect on the market price. So what is happening? For example, you went to shopping. Okay, this is what you bought. You bought one thing, two things, three things. The bill was 400 rupees plus the taxes. Now the price is 450. So basically, indirect taxes are direct and positive. Positive is basically they never say, like for example, your bill is 400. After applying tax, it won't be 300. It will be more. That's why the positive. Okay, on the market price. So market price of the product get affected by indirect tax because add-on taxes are being paid when you go for shopping. There is some taxes in. Sorry, you have to pay. The example is goods and service tax, which is GST. Okay. So again, we will study indirect taxes are those tax which are paid to the government by one person, but their burden is borne by other person. Okay. The incidence and the impact of tax lie on different person. Then it is called indirect tax. Okay. The indirect taxes can be shifted. I can shift it to some other person. Right. Indirect taxes are regressive in nature. Indirect taxes are direct and positive impact on the marketplace thing. Market price, okay, of a product. And example of goods and the example of GST is goods and services. Getting it? I
Yes.
think you can compare
Yes,
it.
ma'am.
Yes.
Okay, so basically it's your choice if you want to make the table like this. Like direct tax over here, indirect tax over here, you can do like this. And if you want to write like this, it's your choice. Okay. So first of all, I'll just show the screen of direct taxes. Just write it down and let me know once you are. Whenever you are making notes, make sure you are reading it. Just read it loud along with. Okay, I'll just wait for
Done.
30 seconds. Okay, done. Good.
Yes.
Done, ma'am.
Done.
Oh, good. So quickly revise it. I'm giving you 1 minute and let me know if there is any issue in difference between direct and indirect. Okay. Done.
Yes, ma'am.
Any
Yes,
query?
done.
Any doubts?
No.
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 Okay. Now basically, what we are done with this direct text and non-direct text. Sorry, indirect text. Now we'll be doing this non-text revenue. Okay. For this non-text revenue, you don't have to remember much thing. These are the example which you have to keep in mind. But yes, you need to understand what is non-text revenue. Okay. So basically, what is non-text revenue? The non-text revenue, or you can say non-text receipt, sorry, are those receipts which are received from the source other than text like fees. Okay. So whatever you are whatever you are getting it apart from taxes, that is known as non-text receipt. Okay, or non-text revenue. Clear? So this is the definition which you will be writing, and these are the points which I'll be telling you. You don't have to write it. You will just give it a reading. Okay. So just write the definition for non-text receipt, and then I'll just start. Okay. Just write non-text receipt, the definition. Non-text receipts are those receipts which are received from source other than text. And from here, there are lots of examples, right? Sale, sorry, interest receipt, profit and dividend, fees and fines, all this. You can write any two examples. But here also it is written fees and fines, just write. Okay.
Done, ma'am.
Okay. Halima done?
Done.
So basically, non-tax receipts are those receipts which are received from any source which is other than tax. Okay. First is fees. Basically, now what is fees? So basically, fees is the payment of the government. For example, you are going to hospital, government hospital. There also you have to pay something, right? You are using any government property, you have to pay a little amount. Okay, so that is the fees. The fees is a compulsory payment you have to pay. The fees, entry fees you can say, or you go to a museum, there also you have to pay some entry fees, right? Fees provide a specific benefit to payers. See, why they are taking the fees from you? Because the one who is managing, right, the one who is managing the museum, they also need some money. They also, government has also paid them the salary and all that. So that's why the fees, they are not tax. You are not giving any tax. This is something which is compulsory. So fees is a compulsory payment. Fees provide specific benefit to the payer, and fees is not a payment that is commercial. Fees is not being taken to you, sorry, from you with the motive of profit maximization. No, it is compulsory. Yeah, you have to give it just for the maintenance. Okay. Next, license and permit fees. Whenever you go for the licensing department, you ask for license for two-wheeler, four-wheeler. There also you have to pay. So that is also something other than tax. Special assessment is basically whatever property you have to pay some charges. Okay, that comes under special assessment. Okay. Ancient basically refers to the legal properties. Somewhere government, work on the properties. There also you have to pay some money. For example, you are constructing any building. So that in that case also you have to pay some amount to the government. Okay, that is not a tax, but yeah, some other than tax. Okay, fines and penalties. For example, you jumped the red light. Okay, you broke traffic rules. Okay, or you did anything which was not legal. So you have to pay fines and penalties, right? It was mentioned you don't have to spit over here, but you spit it. So in that case, you have to pay the fines. This is not a tax, but other than tax. Okay, gifts and grants. You're giving gift and grants to somebody else. Okay, that won't be considering as tax or anything. That also comes under like this. For example, my country is facing issue due to earthquake, sudden earthquake. So at that moment, what will happen? Somebody else will come to me and they'll help me. They'll grant me help. Okay, so that is not a tax. That is something other than tax. Okay, income from public enterprises. If you are establishing your company, you have to pay some amount to government. Okay, being a private entrepreneur, you have to pay. So that also comes under non-tax revenue. Interest on loan. You took loan from government and now you are paying interest. That is not a tax. That is interest. That is other than tax. Okay. Most of the students get confused over this interest on loan. They think this is a tax. No, this is not a tax. This is the interest. There is a difference between interest and tax. Okay. Next, frontier of bond. Okay. The penalty is imposed. Like what if, for example, you did something wrong and there was a penalty. Like I asked you, you have to pay 200 rupees fine, 2000 rupees as a penalty. Or for example, you and I made an agreement that I will be giving you milk, you will be giving me water. This was the contract. Okay, but somewhere I stopped giving you milk. I stopped supplying you milk. So I broke the contract. At that moment, I have to pay because in agreement it was clearly mentioned you have to give me water. In exchange, I have to give you milk. But I broke the agreement. That's why I have to pay some fees. I have to pay some fines. That is known as forfeiture of bonds. Okay, if you if you don't stick to any bond, if you don't follow any particular thing, then if you break out any rule, then you have to pay fines. That all these things, these 9 things comes under not tax revenue. So I'm just giving you 2 minutes to read this. Just read it. Okay, you don't have to write anything, just read it. Okay.
Okay.
Fees, licensing and permit, special assessment, and incentives.
Done, ma'am.
Okay, both of you done?
Yes, done.
Just read it, okay? And in case you didn't get any line, just let me.
Okay.
Done?
Done, ma'am.
Salima done?
Done.
So basically now we move to the chart. So we are done with this direct tax, we are done with indirect tax, we are done with non-tax revenue. So basically we are done with the revenue receipt. Okay, now what is left? The capital receipt. Okay, so capital receipt will be doing. Okay, so basically what is capital receipt? You already know what is capital receipt. Capital receipt is basically something which affect the liability and asset of the government. Okay, so basically over here, as you can see, there are example of this: recovery of loan, investment, disinvestment, borrowing, provident fund, right? So for this, you need the explanation. Okay,
Yes.
so first, basically, capital receipt are of I have just written like here three things are mentioned. First, borrowing and other liability. For example, you borrow from someone. So what will happen? That will affect the liability. You are borrowing it. What will happen? That will create liability. That means that will increase your liability. Okay. So first you will write borrowings and other liability. Borrowing creates liability for the government. That's it for here. Okay. And from where now government will be borrowing? So government borrows money from first general public. General public, like whatever you are depositing, government will use that. Second, RBI, Reserve Bank of India, who is the central bank. From there, but in case these two people don't help, then government go to rest of the world. Like they'll be asking the foreign government, like the government of US, the government of UAE, government of Dubai, like that, and international institution like World Bank and IMF. Okay, so borrowing, what you will be writing? Borrowing creates liabilities and liabilities for the government. That's why it comes under capital receipt. You have to add the line over here that borrowing creates liability for the government. That's why it comes under capital receipt. Okay. Then government borrows money from first general public, second Reserve Bank of India, and third rest of the world. Like apart from your own country, you are asking help from other rest of the world. So like foreign government and international institution like World Bank or IMF. Okay. Second, recovery of loans. Recovery of loans, what is this? This is very important point, recovery of loans. Now, basically what happened? Recovery of loans. Recovery of loans is basically, for example, this is you You have given money to one person, two person, three person. Okay. So basically, you have given people to this 100 rupees to him, 100 rupees to him, and 100 rupees to him. Every month they pay you. Right? Every month they'll be paying you. This is the person who paid all the amount. He cleared everything. He paid all the 100 rupees. Okay. So basically, he recovered. Right? He recovered the pay. Like he paid everything, so he recovered. So basically, these were the assets of government. Right? From them, every month the money was coming. That's why they were assets. But now this person has already paid all the amount. So that's why what is happening? The assets are getting decreased. Earlier there was three people who were paying loan, recovering the loans, but now he has already recovered the loan. They were repaying, but now he has recovered. So only I have two people who will be repaying me the loan. So what's happening? My assets are getting decreased. That's why it is a capital receipt. Getting it?
Yes, ma'am.
Okay. So recovery of loan, the debtor. Debtor means the one who has taken loan from us. Okay. The debtor are assets for the government. Okay. Recovery of loan cause reduction in asset because debtors are getting decreased. So that means it is a reduction of assets. Hence, recovery of loans is a capital risk. Okay, till here you will be writing. I hope this is clear that debtor are assets of the government. Recovery of loan cause reduction in assets like reduction in debtors of the government. Hence, recovery of loans comes under capital or is a capital receipt. Okay. Now, other receipt. Other receipt, it includes all other capital receipts like disinvestment. What is investment? Investment is basically, for example, I purchased this new house. This was the investment. Okay. But I took loan from someone else and I was unable to pay that loan. So what I have to do? I have to sell this house. Okay. So investment is purchasing something. Disinvestment is selling that thing. Opposite of investment. Okay. So other receipt is include other receipt like disinvestment. Disinvestment is opposite of investment. Okay. You don't have to write this. Then you will write this investment occur when the government sell off its shares of public sector enterprises to private. This investment happens when government sells off its shares to the private sector. Okay, it is called privatization. It is treated as capital receipt because it caused reduction in the asset. Earlier you had one house, right? The asset, but now as you sold out that, as you sell off that, so basically now you have zero house. So your assets are getting decreased. That's why it is a capital receipt. Getting it,
Yes,
guys?
ma'am.
Yes.
Okay, good. So again, I'll just explain you again. Borrowing means you are taking from someone and that will be creating liability. That's why it comes under capital receipt. From where government can borrow? From three people: general public, RBI, and the rest of the world. Recovery of loan. The debtor are the assets of the government. So once recovery of loans takes place, there is a reduction in debtor. That means reduction in assets. And when there is a reduction, that is like our assets are being affected. That's why it is a capital receipt. Other receipt, we can include disinvestment. Disinvestment is opposite of investment. Disinvestment occur when government sell off its share of public sector enterprises to private sector. Okay, and it is called privatization. It is treated as capital receipt because it caused reduction in assets. Okay, done.
Yes, ma'am. Yes.
Quickly write it.
Yes.
Done, ma'am.